Welcome to Smith Weekly Discussions, an occasional program for our readers and listeners of Smith Weekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience of Smith Weekly, including Todd A., Dave V., and Andy J. On the show today is Russell Hallbauer, CEO and Director of Taseko Mines, an operating copper-focused producer with various stage assets in Canada and the United States. Aside from the current and near-term producing assets, Taseko holds an impressive pipeline of copper-gold assets in development. The company is listed on the New York Stock Exchange under the symbol TGB, and also on the Toronto Stock Exchange under the symbol TKO. Russell, thank you for coming on the show.
Thank you for inviting me, Andrew.
Well, Russell, I understand you've been with Taseko for probably near 15 years now. Can you tell the audience about your ventures prior to Taseko, and then tell us why the company really attracted you?
Well, I'm a mining engineer by training. I graduated from Colorado School of Mines a long time ago now, if you look at it. It's back in 1978. I joined Newmont of Canada working at the SMITHWEEKLY copper mine, which is now part of the Copper Mountain stable of operations. I worked there for 4 or 5 years, and then I joined Teck Resources in 1983. Went into the coal business till, what year was that? Probably about 2002, and then ran the base metal business for them for a number of years before I joined Taseko in 2005.
And what did you like about Taseko? What made you come along to the company and take over like you've had for such this period of time?
Well, basically, I'm a British Columbia boy. I spent my whole career effectively running mining operations in British Columbia and Western Canada. So I kind of knew the lay of the land with respect to the type of properties that were available, the mining operations. If you look back at our key producing asset, the Gibraltar mine, I knew many of the managers over the years of the operation. I'd been there a number of times over my career. I knew the potential that the ore body had and the asset that was available to the Hunter Dickinson Group when they acquired it in 1999. So I thought in 2004, I was 50 years old, 51. I had been with Teck for close to 25 years. I thought that I'd take on another challenge and see what we could do with the Gibraltar asset. That was the start of that of the past 15, 16 years I've been with the organization.
And through your experience in the mining business, Russ, and it's expansive in terms of what sectors you've been in within the mining business, what have you found that works well, and how does things work? How do you approach when we move between the ups and downs of these market cycles?
Really, it comes down to people. You can take some pretty marginal assets and make them work if you have the right team, and I don't mean just the right corporate team, but I mean the right operational team. I've always maintained that a company our size is never going to get tier 1 or tier 2 assets. We're going to be lucky to get a tier 3 asset. And so if you get a tier 3 or a tier 4 asset, if you take the intellectual capital that you have in your organization along with the skill sets that you try and put together, you can take these assets and make them very financially successful. And true success is both on the ground and for the communities in which they operate in. So I did that with Gibraltar when I got here in 2005. It was a concentrator and a mine that had been built in the early 70s. It had old technology. Technology has advanced incredibly in the last 25 or 30 years. And we knew, the guys that had come with me and were working with us, we knew that we had to change the whole approach to concentrator performance and throughput to ensure that we survived during the cyclical nature of this business. So these places can do really, really well when the prices are high, and what you have to do is ensure that you survive and can generate an operating profit when prices cycle back to lower price regimes, like what they are now.
Right. And let's move on. Let's talk about that for a moment. What thoughts do you have on the copper market today, and how does it compare to past cycle lows in regards to price and sentiment?
Well, I haven't really done a time value of money analysis on the price of copper, but in real terms, it's probably, I don't know, it's probably back in the $1.50, $1.30 range. So you'd have to have your cost in the, 90 cents or 80 cents US C1 cost range. So now we're, they predict that, everybody's talking about the long-term price of copper. Well, we're right at the long-term price of copper. The mean is right around, I think a lot of the analysts are saying it's like $2.75 to $3. Well, it's a little bit lower than that at this time, but what you have to do is just look and develop your strategies based on what you think is a reasonable expectation of price, not get too excited about the highs and not get too excited about the lows, but ensure you have proper operating metrics to ensure that you get by those lows and you really take advantage of the highs. If you look at our company, we are very, very leveraged to two things, and that's the price of copper and the Canadian-U.S. dollar exchange rate. So when things are good, we can generate a lot of cash very quickly. For example, when I was running Highland Valley Copper, responsible for Highland Valley Copper at Teck, one year we made $6 million in operating profit. And at that time, that mine was probably the sixth or seventh largest copper concentrator in the world, producing 300 or 400 million pounds of copper. We made $6 or $7 million operating profit out of it that year. The next year, price of copper jumped, and we took $500 million. And the following year, we took $900 million of free cash out of the operation. So the sensitivity of being in the right, having the right operating cost structure, and then price, responding accordingly, you generate a lot of cash for the shareholders very quickly.
Right. And how do you feel right now with where Taseko is, the position of Taseko today versus what it looked like late 2015 in terms of share price and sentiment?
Well, it's always, we're a far better company overall than we were back in those years. I mean, we've progressively grown the asset base of this company without risking the company on any downturns. And you see a lot of companies at times will roll the dice, and the next thing, acquire a property at the wrong timing, things go against them, and that's the end of the company. So we've tried to stay between our means. We invested, we raised capital back, we expanded Gibraltar. Gibraltar became the key, the cornerstone asset for the company, generating cash, allowing us to move forward and undertake both the expansion of Gibraltar, but also to acquire a few other assets and have cash available to invest in them. So if you look at the size of the company, irrespective of the market cap, which is obviously a concern for us, because certainly our equity is one of the things that allows us to grow the company. And when you have poor equity value, you can't do any equity financings, or you can't use both debt and equity to grow the company. You just have to use your cash flow and a conservative debt profile. But you have to look at how we've grown the company. I think exclusive of New Prosperity, we have over 8 billion pounds of copper in reserves, 500,000 ounces of gold in reserve in our Yellowhead property, and over 12 million pounds of molybdenum at Gibraltar in reserve. So we have this huge asset base that allows us a lot of flexibility in terms of what we can do moving forward without having to do equity dilutions. We can sell portions of our assets, we can sell joint ventures, and that money can go into advancing these projects. We've been fortunate so far that we've been able to fund all of our work on Florence out of the cash we generate out of Gibraltar. Having said that, that can be a challenge when the copper prices are where we are right now, but nonetheless, we've been able to do it because we can generate, for our portion of Gibraltar, $150, $200 million of operating profit. Keeps the company moving forward.
Well, let's talk about a few company specifics now that we're getting into it. Can you first give us a highlight overview of the management team there at Taseko, and then tell us a little bit about the capital structure?
Yeah, well, the management team, we've got a pretty thin corporate office. We've really prided ourselves on our technical expertise, so we have most of our senior staff are mining engineers. I'm a mining engineer. Our COO is a mining engineer. Our vice president of engineering is a mining engineer. Vice president of projects is a metallurgical engineer, and he's a very good met engineer, and he was the one that was responsible for capital projects and expansion of Gibraltar on time and on budget. And then we have a full cadre of metallurgical engineers. So we've got and that's not taken away from any of the professional people on the finance side, which we have a very excellent group there, but we're pretty small corporate office, but we're pretty focused on the things that the strengths we bring, which is financial discipline and engineering expertise, and just taking our time, ensuring that we evaluate projects properly with the proper due diligence, so that we don't go into trying to build something that is going to fail, or that we can't bring in on time and on budget. So most of the fellows I've worked with, either at Tech in the old days, or new fellows we brought on board, folks we know and have personal relationships with. So we've got an excellent team to continue to move the company forward.
And tell us a little bit about the shares outstanding and also the cash and debt position.
We've got around $300 million debt and 230 or 40 million shares outstanding. And our equity, I don't know what our equity's trading at, like 50 or 60 cents. Yeah, so we probably got a market cap of 130 million Canadian, somewhere in that neighborhood, 100 million US, which is basically, if you look at it, if you work back and did a long-range price of copper analysis on Gibraltar, that's probably our 75% of it's probably worth close to $1 billion pre-tax. So there's, we're trading at a fraction of the value of Gibraltar, irrespective of what the value of the reserves are. With the rest of our development projects. So to say it's a little frustrating from our perspective as the senior executive team in terms of what our equity is worth. Over time, that takes care of itself if we execute properly. There's not a lot we can do at times on that matter, but sooner or later it gets recognized in the market. A perfect example was way back in about 2009, 2010, just after the financial crisis. Our equity was trading about $350 million. I ended up selling 25% of Gibraltar to a Japanese consortium of a major trading company and two smelter companies for 25% for just under $190 million. That equated to, so that was a third-party validation of what the value of Gibraltar was independently, and our equity moved from 350 to over close to $600 million, just like that, once we had that third-party valuation. So what we see in the market today, the capital markets today, is not indicative of the value of the underlying assets. I mean, even if you give 8 billion pounds of reserves, these aren't resources, these aren't etheric things in the ground. These are reserves that have feasibility studies on them, have NPVs, and even if you take those reserves and give them a nominal value of pennies on the per pound, it still is far in excess of our equity value today. So certainty that this value will be unlocked in the not too distant future.
Well, yeah, Russ, and it really is truly a pennies on the dollar situation, which adds to the attractiveness on it. Can you tell us just a little bit? Is there some key shareholders you want to highlight, and is there anything that management's doing at these current share levels to align themselves further with shareholders?
Yeah, we have a number of shareholders that vary between, 2 or 3 or 4% of the equity up to maybe 8-10%. We're widely held. There's no controlling shareholder per se, but there's a lot of we have a lot of aligned shareholders that understand, the company is in better shape. Like, 24 months ago, our stock price was $3 per share, and today it's, 50 or 60 cents, talking Canadian dollars. So there's lots of people that see the inherent value in the company, and it's like what's gone on with the Western Canadian oil patch. There's no reflection of the value of the assets in the ground versus what the equity is trading for. But sooner or later, that takes care of itself.
Absolutely. No, I think that there'll be some future respect for what's being done over there at Taseko. So how are things? Let's move to project by project here. How are things going at Gibraltar? Can you give us an update on how things are operating there?
Well, Gibraltar's very stable. After we did the expansion and started running at 85,000 tons a day, it's a big operation. We're going to produce between 130 and 145 million pounds of copper, 65 to 70,000 tons of metal a year for the next 20 years in the reserve. We probably have another 15 years of resources beyond that, and we still haven't finished drilling out. We don't need 50 years of resources, so we still have plenty of, runway on that ore body. And, and it's such a great ore body. I mean, sure, the grade is a little lower than lots of places, but you have to look at what your costs are in versus to what your rock value is. And, we've been maintaining our costs between 10 and 11 bucks per ton milled. And the gross metal value of the rock can go from anywhere from $15 to $20 a ton. So if it's at $20 a ton, we got nearly 100% margin on our cost side. So we're very comfortable with that. We're training our people. We have a very stable senior workforce up there. We bring in new engineers and new managers, and yeah, it's going as well as we can expect, and it'll continue to generate good operating profit even at these copper prices. So it bodes well for the future when copper prices, I mean, the leverage is so, copper prices go up 10 or 15 or 30 cents a pound, 10%, that all flows right to the bottom line because of our cost structure. And then that obviously allows us to use that cash and the technical expertise we have at the mine site to move on our other projects as well.
And based on current operations, can you share with us what you're seeing for all-in cost per pound copper? And are there any optimization efforts ongoing, or do you have really Gibraltar is really running about as lean as it gets?
There are always things you can do, new technology, advancements. We're always looking at things all the time in terms of increasing throughput. If you can increase throughput by 3,000 or 4,000 or 5,000 tons a day, well, that equates to probably 10 to 15 to 20 million tons of extra copper a year, which would all flow to the bottom line. You look at how we do our pit designs, and we're constantly refining our haulage route, trying to shorten the hauls, just a whole slew of activities that are never ending. When you're mining a mine like Gibraltar or mining an ore body like Gibraltar, you always have to be looking for opportunities to take advantage of flowing value to the bottom line. So we do that steady. We always assign a certain amount of our budget yearly for cost improvement initiatives and other things that will enhance the productivity of the mine. Specifically, when I started, we had 240-ton trucks. Now we got 330-ton trucks. So that's a huge difference in terms of capacity, unit cost reductions. Engines are getting, we're running 3,000 horsepower engines now, and they're probably getting the same fuel economy as the older generation 2,200 horsepower engines. So we're saving on that. We're just, like I said, it's just ongoing, Andrew.
And going forward, I think you already covered it, so I guess I won't ask too much more, but it sounds like you guys have plenty of mine life expansion ahead of you, so there's not really any need at this point to expend capital doing anything on that front. Is that correct?
Yes. Yeah, we stick some holes around, see if we can, find some more mineralization that would be closer to inherent pits right now that we could expand on. But generally speaking, we've got the runway set for a while, and then we'll just look at what we want to do longer term. I guess we could always, and we have talked about this, whether we could, when we built the second concentrator, we always looked as was a bolt-on. So the SAG mill is big enough power to run more throughput. All we have to do is bolt on another ball mill, and we can increase the throughput considerably. But we always look at that. You have to look at how your mining sequences work, how you release ore. You don't want to screw up, say, okay, well, we're going to expand, but then you find out your costs go up by 20% because you can't release your ore properly. So it's a fine balance between throughput, mine design, mine efficiencies.
And tell us a little bit about the 25% Japanese partner at Gibraltar. What is the importance of this partner, and do you see them with further involvement in other Taseko projects going forward?
The trading house company's name is called Sojitz. It's a publicly listed company in Japan. It's probably the fourth or fifth largest trading house behind Mitsubishi and Sumitomo and some of those other ones. I've known a lot of the senior executives for well over 20 years, so that's one of the reasons that we came to an early agreement on Gibraltar and as a partner. Generally speaking, you always want to have a smelter group that's buying your concentrate as opposed to selling it all on the spot market or to traders. So that partnership is good. We know that they're picking up X number of tons every month or every 2 months. We have a good working relationship with them. They help fund capital expenditures. And I'm not sure about their strategic direction as an organization. I don't know whether they're more or less interested in carrying on copper business or lead zinc business or any of those other businesses, because they ebb and flow in and out of those businesses, Japanese trading companies. So we'll see whether we have opportunities that they're interested in, and if they're interested in that, they would make a very good partner.
Well, I appreciate the insights on that. Let's move over to Florence Copper in Arizona. tell us a little bit about the project, why it attracted Taseko, and how is the advancement work going on the ground there?
We knew about Florence for a long time. Our technical group had some discussions with them way back when about maybe joint venturing with them. They were a public company. It was floated. They had purchased the property from a land developer a number of years ago. God, it's got to be getting pretty close to 10, 12 years ago now. And it always struck us as a very interesting concept, but being a risk-averse technical group, we were a little bit uncertain at the time whether it would something that fit in our bailiwick, so to speak. And at that time, we were looking at projects all over Western North America and into South America, and trying to find one that would fit with our capabilities, but also fit financially with, we didn't want a $2 or $3 billion project. We didn't want to have to go out, try and raise a whole bunch of money and find partners and stuff. And those ones they're harder to acquire at a reasonable cost. So when the time came that we thought that the equity was well enough priced that they had advanced the project far enough, then we did due diligence on it. Probably took over a year for us to do the due diligence, checking all the legal issues, checking the technical work that had been done by BHP and Conoco and the other owners prior to Curus acquiring it. We spent a lot of time and came to a conclusion that the property would fit into our financial framework. It had lots of opportunity to be a low-cost producer, and we felt that the technology was there, and the componentry of the ore body was there that would allow it to be successful. Having said that, we had a few challenges from the local community who felt that they were the watershed or the aquifer was not going to be protected. We worked diligently with the EPA and the Arizona Department of Environmental Quality. We've worked through all those issues. Well over a year ago, we completed our production test facility, drilled the well field, the production test field, well field, and we've been actively injecting solution into the ore body, this area of the ore body, and it's been leaching fantastic. We're really happy with the advancements we're seeing. And this production test facility is actually a commercial scale facility. So lots of times when you build something, if let's say it's an open pit mine, you do all the metallurgical based test work, at bench scale, and then you go and build the mine, and then it takes you a year or two to debottleneck it. Well, we're actually doing a lot of the debottlenecking right now with this test facility. We're learning how the copper will electrowin. We're producing close to 2,000 ppm of pregnant solution coming out of the ground, which is the commercial grade solutions. Our main well that we're recovering copper from is producing roughly nearly, on an annualized basis, nearly 700,000 pounds of copper right now. Yeah, things are going... we had some setbacks and we've had to regroup, but that's all part of the learning process. We have these deep wells. This hasn't been done too many times in the world with this kind of configuration. And so we're learning how you disperse the acid solution inside the ore body, how you move it up, how you control the water gradient, and how you recover the pregnant solution. So it's a complex technical issue, but our guys are doing a great job in understanding it, and our knowledge of what we have to do is just increasing every single day. So we'll be providing the market an update on this shortly. So we're pretty excited of how it's going. And with respect to the final operational permits, we're dealing with the Environmental Protection Agency and the Arizona Department of Environmental Quality right now, taking the temporary operating permits and converting them into amendments so we get our final operating permits, and we expect by sometime next summer, early spring, summer, that will be complete, and then my board can make a production decision to spend the money to build the facility.
And so, Florence is supposed to be one of the least capital-intensive major copper projects. Can you tell us, if you can share with us, Russ, what do you see as costs out there per pound copper once optimal production is reached? And can you share with us your plan for the financing package?
I think from the feasibility study, it was $1.10 a pound, all-in costs. C1 cost, but we're producing actually cathode copper. So That will be updated as we gather more information from this test facility. But, let's say $1.10 to $1.20 a pound, give or take, a nickel, probably reasonable to expect. So when that comes on stream, that will help lower our overall cost from Gibraltar to a weighted average cost for the whole corporate entity we'll probably be down in the $1.40, $1.50 a pound range. And so that will be a good path forward for the organization to develop our rest of our assets. How we finance that, again, I spoke a little earlier about because we have these reserves and resources, we're able to attract investors. So we're working on either straight debt financing at some point, or bringing in a partner. So we'll decide what cost of capital is best for us and how our balance sheet looks with respect to that. I mean, it's not a big nut in terms of the total capital costs. We're probably looking at a little over $200 million US. And with the cost profile that is predicted, I'm sure when banks hire independent engineers to look at it, we'll fit into their risk profile in terms of being able to borrow money at conventional debt rates. And or we sell 10 or 15 or 20% of it to help ensure that our balance sheet stays in good shape. So we have lots of irons in the fire with respect to that.
And Russ, how much do you think you can strip off of Gibraltar cash flow to help carry this along?
Well, that's a good question. If it's like $4 a pound, it's a lot of cash flow. We're funding everything right now. We probably have a break-even budget right now of funding about $30 million of operating expenditures at Florence out of the cash we generate at Gib. So we're paying our debt, paying our interest, we're paying that, and we got extra $30 or $40 million to invest into Florence. If the price goes up $1 a pound, then we got another $110 million net to our account. So in this business, 6 months is an eternity. So anything can change. We saw it happen before. Copper can run very quickly, and when that happens, we can generate a lot of operating profit that can go towards these projects.
And Russ, you're not foreseeing any issues with your current schedule to finance and build this out and convert the permits. There's no foreseeable issues with meeting your schedule you guys have laid out?
No, I don't think so. I mean, other than normal course business and other than what happens with the copper price or, what happens with world economies. But I think steady state, we're not seeing any encumbrance. We're just moving forward steadily, working on everything that's involved, and it's a lot.
Once this comes on, Russ, once Florence comes online and is up at nameplate, do you really see that milestone is really a pretty big game changer for Taseko?
So let's say we were able to do it ourselves, 100%. That's 80 million pounds of copper. Then Gibraltar's, to our accounts, 110 million. So now suddenly we got nearly 200 million pounds of annual copper production. And then that would segue us right into building Yellowhead, which will be another big development, open pit development, 90,000 tons a day, generating, I think, our new plans probably close to 180, 190 million pounds of copper annually at a very decent C1 cost. So, yeah, it's a progression. These things take a long time to get to where they should be, but that's why my thesis has always been you have to have long-term reserves. You can't have a 5 or 6 year mine life to build a company. You need years of reserves. You need at least 2 decades, and then have in your pipeline mines that have decades beyond those to go, so that you can actually build that wealth. These places that have 6 or 7 years, you just turn around and you're looking where are we going to get the next reserves from?
Right. And Russ, we expect you're not going anywhere anytime soon, correct?
Well, I am 65, so I'm 66 at Christmas time. So, but we running the rope out to its end here. But yeah, we got this and that. No investor should be ever worried about this, because one of the things that we have is we have a very strong succession plan here. The guys that are coming behind, the older guys, it's a very strong group, and there'll be no shortcomings with any of those fellows in terms of the operational and the technical side of the business. We have a strong financial group now with our our new president, CFO, who's a strong chartered accountant and have lots of business acumen, dropping down through our ranks. Our new vice president of operations and all the new guys that we've brought into the office to fill the void behind us is pretty impressive. So I'm pretty happy with what we've done in the last year or two.
Well, with the stubbornness of yourself and management, I suspect you guys will keep moving along here quite steadily. So once Florence is nailed down, all efforts are going over to Yellowhead. So tell us about Yellowhead. Tell us what's going on there.
Well, Yellowhead, it was a great acquisition for this company. I originally invested, I put a private investment into the company because I knew the folks that were running it. They were a little tight for cash. I think it was about 6 or 7 years ago. I bought about 10% of the company. We put a $5 or $6 million. We weren't sure exactly on the reserves whether they had done enough drilling. Remember, it was a junior company. Remember, I talked about our guys being risk averse. I took that little dip the toe in the water and did an investment. And part of that investment was they had to put most of the money into drilling. So they drilled out some gaps in their ore body. And we were pretty comfortable with it. And then we just sat there and watched because we had other things on the go. We had Florence on the go. We had Gibraltar work, da-da-da-da-da. And we watched how they unfolded their business plan. And they didn't have much success. The market cap originally started at about $120 million, went to $60 million, went to $20 million, and it ended up at about $2 or $3 million bucks. And it was mostly controlled by a private investor out of Calgary. And I'd known the gentleman for a number of years, and we decided to come to agreement, and we acquired the property and put it in our stable. And right now, we're working on doing an updated feasibility. There was a feasibility done on it. It was 20-year mine life. It's got a big ore body, almost 750 million tons. We knew from our early engineering work that we could decrease the cutoff a bit, increase the throughput, and have a heck of a good mine. And we're right in the process of doing an updated feasibility study and an updated 43-101 as we speak. And I'm not sure when we'll have that report out, but we've definitely increased the MPV considerably, and we're pretty excited about what it's going to entail. So sequentially, it's going to fall, after Florence. We get Florence commissioned and running, and during that interim period, we will have our business done on Yellowhead so that we're ready to go with that once everything comes together on Florence. So it's a nice segue here down the road.
Yeah, no, it's well placed. It's the pieces of the puzzle are quite well aligned, and if you have Florence on, this is gonna only make Yellowhead even easier. What do you see as the main challenge at Yellowhead? Is it the build out? Is it the permitting, the community relations? What do you see here as a challenge?
Well, over the years, the thing, like in most jurisdictions in the world, it's all about government relations, community relations, particularly in Western Canada here now, it's about First Nations relations. So all those things, as it's not the technical side of the equation anymore. Before it used to be the technical side, and those were the afterthoughts. Now those are the forefront thought, and the afterthoughts are the ore body. We know the ore body is going to perform well. We know we can make a mine out of it. You just have to have everybody from provincial government, the federal government, to the First Nations, to the local communities all aligned. Certainly there's always challenges there, but I think people start to recognize that the amazing impact one big base metal mine can have, not just on a local community, but the whole region. If you look at what Gibraltar has done in the Central Cariboo, we're the largest employer from Prince George to 100 Mile House, and that economic outflow is tremendous. For when they're spending $300 million a year in parts and services and others, that has a big outflow into the communities, and that's the same kind of thing that will happen with Yellowhead. So the challenges will be no greater or less than we've ever experienced. They'll just be there, and we'll just have to knock them off and deal with them as we go through the process.
Right, and how does 2025 still look in your schedule book for Yellowhead? Is that something that obviously is?
Yeah, I would think that's probably a reasonable expectation that we'd start moving on it in 2024, 2025, somewhere in that neighborhood.
Okay, that sounds good, and I think that we could probably figure that copper prices will be doing well by then. Well, let's move on. So let's assume that this continues on here, and you also have other things going on at the same time here. Let's move on to the next monster in the room, and that's New Prosperity. Can you tell the audience about this project and what you guys are working on here?
Well, New Prosperity, yeah, it's discovered in the 50s, kind of gone back. Normally from discovery to construction and operation for major porphyries in the world, it's about 18 to 20 years, somewhere in that neighborhood. So we've kind of stretched past that limit. A lot of our issues have been First Nations relations in the context of First Nations politics in the area. We are diligently just working through some of the court process, discussions with government about how to move the thing forward, discussions at some point, we hope, with First Nations. One of the important things that we have to realize is that over time, when we first started this process 12, 13, 14 years ago on New Prosperity, moving it, the copper, our reserves were done at $1.60 copper and 600 ounce gold. And the NPV was like 350 or 400 million. Well, right now, if you use 275 copper and 1,400 gold, the NPV is probably north of close to $4 billion. So the mere fact that we haven't built a mine should not take away from the fact that the NPV and the value of the inherent asset hasn't increased. So our plan is just to stick with it and to keep doing what we need to do, and hopefully everyone will see that the value developing and building New Prosperity will flow to everyone. It'll flow to the First Nations communities. It'll flow to the local inhabitants of the Cariboo. It'll flow to the provincial government. It'll flow to this company. So it takes some time, but it is what it is.
And Russ, how important is this asset for Taseko? Because from what I can tell, there's literally zero value reflected in the share price for this asset. Can you tell us about the importance, and can you share with us a bit on the strategy going forward, especially considering that the gold price will probably cooperate to support more efforts on getting this project momentum going?
Well, obviously, if we had been able to build a mine and been operating in today's environment, we'd be producing over 300,000 ounces of gold a year and 150 million pounds of copper. This thing would be generating well over $1 billion a year in operating profit. It would have a huge impact on this company. It would have a huge impact on any company, not just this company. I mean, it's the 10th largest undeveloped copper gold porphyry in the world. So it's not, I think there's 13 million ounces of gold in the resource and 6 billion pounds of copper. So it's a huge asset for the people of British Columbia and for this company. So yeah, but when you get diving and trying to advance some of these things, and you see them in other parts of the world as well, the companies have to have irons in the fire to do other things to continue to build the company. And as you can see, yeah, we were really optimistic that we were going to get the opportunity to build New Prosperity. When it didn't happen, we just moved onto these other assets that would give us an opportunity, and keep looking for other ones that add the pipeline for us out for 20, 30, or 40 years. Because sooner or later, New Prosperity will be a mine. And sooner or later, I believe that the First Nations in the area will recognize how important it is to their ultimate well-being and their cultural abilities to maintain their culture and move forward with everything they want to do with respect to what kind of contributions they will get from the mine from it being operating. So there's all these trade-offs. So I think we'll see something in the coming future. It's not like we don't talk about it all the time with the government.
Well, no, and I just think that Taseko is demonstrating operational ability, those corporate responsibility relations, the whole mess. I mean, it's not like you guys are there in BC. You guys are doing multiple things in BC. You're working out of Arizona. There's a lot to it. And what do you see there? I mean, we talked about Yellowhead earlier about challenges. What do you see as really kind of key challenges? You guys are no longer concerned about the operational ability. Is it really just kind of getting the federal government and provincial government and the First Nations on board?
Yeah, I think, you just see it in general resource development today. There's a lot of people are involved with the decision-making process. It's just not the companies. I mean, if you look in Western Canada, the pipeline issues, whether it's LNG in Western Canada, you look at anything with resources on the ground. Parties are the companies, the First Nations, and the two levels of government, and maybe more levels of government, whether it's be regional, district, or local communities. So once you add that into it's just not going out there, okay, we got an ore body and we can build a mine and everybody's happy. You have to bring all these various communities together of like mind and say, okay, what's the best for society as a whole? Now, we've been pillarized a bit because of our position with respect to the First Nations issue in the Cariboo. But people don't understand is we have three or four different First Nations agreements ranging from our niobium project in northern BC to the relationships of First Nations around Gibraltar, and we're working on the relationship with the one and the deal with the one on Yellowhead. So, it's just like life. Sometimes you don't get along with your neighbors because your neighbor wants to build a 100-foot fence and you don't want to have that interfere with your view. So, everybody's got their own opinions at times, and you just have to try and work through it to find out what mutually works for everybody.
And what are you guys doing there as far as community relations on the project? What's kind of the approach? I know, Russ, you guys know this stuff. I mean, there's other companies in Alaska doing this. There's plenty of efforts here. What is a few specifics you can share with the audience?
I can't share a lot of specifics because some of the discussions are confidential, but certainly the regional communities know the importance of new prosperity up there, and our ongoing relationships with the Ministry of Mines and the Ministry of Environment and the First Nations Ministry in British Columbia are ongoing, so they just take time to work through.
Right, and you guys are demonstrating that ability through your other operations. So how about the other assets? You mentioned them just a little bit, Harmony and Alley. What is the plan for these assets?
Company our size, we can just take on so many opportunities. Harmony is it's out in the archipelago at Haida Gwaii, quite a different First Nations dynamics out there with the Haida. We just have too much on our plate at this time to worry too much about that, so we just kept keeping our claims in good standing. As far as Alley is concerned, it's the third largest niobium deposit in the world. We're trying to find an offtake partner. It's very hard on these special metal developments to just say, okay, I'm going to build a mine and I'm going to sell the product. It's not like copper where there's a market. You have to have an end user. So we have to try and find somebody that would say take 50% of our material, and that way we could market the other 50%. So you have to almost have a take or pay arrangement. And there's lots of steel mills in the world. I was just reading the Roscoe report today where obviously niobium consumption has increased dramatically for any number of reasons. A lot of them have to do with, particularly in China, have to do with the reduction of, not the total reduction of steel, but they could make with high strength, low alloy steels. With niobium, you can reduce the amount of steel you have to produce because 1 ton of niobium type steel will replace about 2 tons of just normal conventional steel. It's using other hardening and strengthening products. So it can have there could be potentially a huge market out there. Chinese are not as niobium intensive as the more mature economies of Europe and the United States in terms of using niobium, but it will in turn come. So we just, we're right in the process. We're doing a big bench test now and making metal. Again, it's not the technical side. We've got patent on the metallurgy now because each of these ore bodies is distinct and you have to work through your metallurgy. Frankly, if you look back 4 or 5 years, we didn't even think it was going to be a mine because the metallurgy was so complex. But we've made some major breaks. So takes years to work through these things to come up with the solutions on how you develop concentrate and then how you reduce it into a metal form. And we have some patents on those, and we know that works. So now we're making metal in the test facility and back east, and we'll have a marketable product now. So we're continuing to work on that and looking for either a joint venture partner, primarily a steel mill, or some other third party that's prepared to invest in the project. So we're just pecking along on that as well.
Well, it's a substantial, a lot of assets, and you've got a lot on your plate. Are those last two, Harmony and Alley, are those two assets, if the right buyer came along and the right deal, are those assets that you guys would look to monetize to focus on the core assets?
Yes, we could do that for sure, and we always evaluate that. We haven't had many people show interest at this juncture, but that doesn't mean that that's not going to change just like that.
Russ, tell us about the long-term view of Taseko. Is the company really just going to continue as an operating company and build bigger and bigger, or is there a thought in the back of management's mind about takeover offers? Is that anything that you guys want to do, or you just want to keep being operators?
Yeah, well, you want to be an operator, but you also want to have your equity. I mean, I'm a large shareholder in this company as long as everybody else. with lots of other folks. And, the shareholders speak with respect to opportunities to sell, either be taken over or bought out or whatever you want to look at. But it's got to be off the base that recognizes the inherent value of the assets, not off of the equity in the market. Because everybody says, well, Jesus, the market is efficient. Well, it's not that efficient, as you can see. So it's just there doesn't seem to be many buyers out there that actually are recognizing it. They'd rather buy the FANG stocks, I guess, or something else, or Shopify or something. I don't know, but I just have to look. I'm a mining engineer, but I'm pragmatic about the fact that if this entity is in a larger company, but it would be good for the employees, yes, probably. But would it be good for the shareholders? Well, not if our equity is trading at 0.2 of our NAV of Gibraltar, and let alone not having anything to do with any of the other assets that we've worked for the last 15 years to acquire. So that's it, basically, in a nutshell. We're an operator until we're not, I guess.
Yes, and there's some tremendous value that's sitting here in the market. So I'm struggling to come up with producers in the Taseko peer group with similar market capitalization, maybe a Copper Mountain, maybe an Arrow Copper. Why is Taseko superior at these levels, and why should investors get involved now? What would you say to potential investors listening?
Well, it's a very good question, Andrew, because that's what you have to look at. Everybody, we get capsulated into these groups, Copper Mountain, Capstone, us, Imperial. Arrow's kind of on its own there because of their high quality asset in Brazil, which has kind of taken the market sentiment for a ride there, and they've done very well. But if you compare us to those other entities, then I go back and you have to look at the core assets that those folks have in their portfolio of assets. They don't have the quality of assets. They have no segue on how to move forward in terms of monetizing any of those assets. What could we ultimately? We get a First Nations agreement on Yellowhead. We know that we have this huge ore body. How much is a 30% asset sale worth in that kind of context for a copper project that has a 750, 800 million pound ore body and is going to produce, or ton ore body, and going to produce 3 or 4 billion pounds of copper over its life of its career? Well, we see what happens, Sumitomo bought into Quebrada Blanca for well over close to $2 billion for 30%. And you see it time and time again. Companies, look at what the Koreans had in Cobre Panama. So once you have the asset, you have the feasibility study, and you have the agreements with governments and First Nations, and you have the EA, just think of what you can sell portions of these assets for in a competitive market. You see it all the time. And that then gives you the equity to build the mine or do whatever you need to do with respect to increasing shareholder value.
Absolutely, I agree. And there's some good stuff coming in my view. Well, Russell, how can interested investors reach out to the company if they seek more information?
There's a lot of information on our obviously on our website. It's pretty good stuff. Most of the salient information that you need to understand with respect to reserves and resources. And I think it's good for folks to, compare those. I mean, if you're going to invest in this sort of intermediate market, you got to compare what we have versus what Copper Mountain has versus what Imperial has, whoever you want to say has. I mean, we have the kind of reserves and resources that none of those companies have. And we have some of the reserves and resources that go into larger companies into the second tier type category and just not sort of lower tier companies like us. So people have to look at that and then understand that and then reach out to Vice President of Investor Relations, Brian Burgo. He's up to speed on all of these, and he can walk folks, if they're interested, all the various our projects and where we're at.
Well, Russ, we've covered a lot of ground here. We appreciate you taking the time to share your insights with us about Taseko and really the tremendous opportunity that we have before us. Good luck, and we look forward to having you back for future updates.
Well, thanks very much for inviting me on, and I really appreciate the questions. They were interesting and well thought out, and good luck with your program going forward.